Hi there, you're watching Market Cafe on ET Now with me, Shreyanshi Singh, and with me as always is my co-anchor Snehisha, and over the next 1 hour, we'll take you through news and updates from within the country as well as across the globe, tell you which stocks you should keep on your radar, and tell you what the brokerages are saying as well. But first things first, Snehi, firstly, good morning, and let's take a look at the US markets then.
Absolutely, and it's been a stellar day in trade coming in from the US markets, at least for Friday. Hi there, good morning. Let's take a look at what the US markets were up to, in fact, and stocks rose on Friday with the Dow Jones posting a fresh record high as investors ended a volatile month on a high note. And traders also mulled over crucial inflation data watched closely by the Fed Reserve. You had the Dow that jumped 228 points, or more than 0.5%, to close at 41,563, and this blue chip index touched a fresh all-time high in just the final minutes of the trading session on Friday and closed at yet another record. S&P 500 advanced 1%. You had NASDAQ that also gained 1.1%. So all in all, it seems to be a good day in trade coming in on Friday if you take a look at Wall Street. Now, the personal consumption expenditure price index, which is the Fed Reserve's preferred inflation gauge, that rose 0.2% on a monthly basis in July and 2.5% from a year ago. The result was largely in line with what the street was estimating in terms of this inflation reading, and excluding food and energy, it also rose 0.2% from the prior month. Now, the Fed keeps a close eye on this metric, and it could still influence policymakers' rate decision in September. At the end of August trading, however, the S&P 500 posted a 2.3% gain, while the Dow climbed nearly 1.8%. And however, it was NASDAQ which surprisingly underperformed its other two peers, because that clinched only a 0.7% advance for the month of June. For the month of August. The S&P 500 notched its fourth straight winning month, and a surge in consumer staples, real estate and healthcare helped lift the broad market index in August. Major averages suffered a steep sell-off at the start of the month. Remember, August has been a largely and fairly volatile month coming in for Wall Street. The S&P lost as much as 7.3% before recovering. So if you take a look at that recovery on S&P, it has been quite drastic. The Dow and NASDAQ were down as much as 5.4% and 10.7% respectively at their lows this month. But well, yes, it looks to be a stellar recovery coming in, at least for the monthly basis on all three indices. That is how Wall Street has ended. Let's take a look at what Europe did on Friday. Largely flat is what the European markets did. DAX closing flat. You had FTSE closing flat. Stock 600 also flat with a very mild, very minor positive bias. So that is what the European as well as the US markets have closed. Treasury yields also at 3.909, so not much movement on that front as well. But well, yes, this is what global equities look like. But Shreyanshi, also take us through what commodities did.
Well, absolutely. Firstly, let's take a look at oil prices, because oil prices did extend losses, and that's the kind of move that we saw coming in when you take a look at oil. So largely, when you take a look at Brent crude futures, you're looking at a downtick of about 0.7% there as well. US WTI, similar downtick coming in for that one as well. So that's the kind of move that we saw when it comes to US WTI as well as Brent, and the losses followed a 0.3% decline for Brent last week and a 1.7% drop coming in for WTI as well. So that's the kind of handover that we had going into the week when it comes to oil. Now, the Organization of Petroleum Exporting Countries and their allies, a group known as OPEC Plus, is also set to proceed with a planned output hike from October as well, and that is something that the reports are stating, and that is something that is going to be in focus when it comes to the oil markets as well. Largely, that's the kind of handover that we have. Now, of course, in Libya, you do have the Arabian Gulf oil company that has resumed output at about 120,000 barrels per day to meet domestic needs as well. So that's an important update coming in there. When you take a look at both Brent and WTI, you've seen them posting losses for 2 consecutive months. So on a monthly basis, that's the kind of handover that you have when it comes to oil as well. And this is largely due to concerns related to demand when it comes to China as well as the US that outweighed the disruption in Libya that we've seen coming in. And that is something that the market was also keeping a very close eye on. But for now, on a monthly basis at least, the market is looking away from the Libyan oil disruptions and looking at Chinese as well as US demand concerns at this point. So that largely is the handover coming in when it comes to oil. When we take a quick look at gold as well, you saw a drop coming in when it comes to gold prices. Gold softened as the dollar as well as the treasury yields firmed, and that largely is the handover coming in when it comes to gold as well, Snehi.
Absolutely, and before we
If you like this video, then like, share and subscribe to ET Now.